Markets recover in the last hour of trade to pare most of its losses. Sensex and Nifty and marginally in the red. Mid-caps outperform, end with minor gains.
India's largest mortgage lender, HDFC, slides in trade. This after assets under management grow at their slowest pace in the past 15 months. On the other hand, Bajaj Finance rises 2% after reporting their highest ever loan growth.
Adani Group stocks recover yesterday's losses, a part of it at least. JP Morgan bets big on Adani Ports. NBFCs like Indiabulls and DHFL see losses.
Profit booking in escorts after third quarter earnings meet expectations, followed by positive commentary from the management. Bank of India ends in the green despite worsening slippages, as investors hope the bank will come out of the prompt corrective action framework soon.
Axis Bank reports a robust third quarter after markets closed for trade. Asset quality improves marginally. Loan growth as well comes in at 18%. Bank of Baroda stock also perks up. The company is to report numbers after market hours. Well, those were the top 5 headlines from Dalal Street on a day when traders spent worrying where a scam might break, but ultimately by end of day, we saw a decent amount of recovery in financial stocks which had been beaten down for fear that there might be some scam unearthed. Welcome to Markets Today Talk Back. This is the show where we tell you about all that happened in those 6 hours of trading in 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair.
Lata, hi. And what a session it has been, and what price swings we've seen over the last couple of hours or so. And action really picked up after the 3 p.m. and we'll tell you why. Over the next 30 minutes, we will talk about what mattered. We'll tell you the 5 stories. Our guests will take your questions as always. And now joining us to answer your questions are Mayuresh Joshi and Mitesh Thakkar. Gentlemen, thanks very much, Mayuresh and Mitesh, for being with us here on the show. But before we start the discussion, let's actually take a look at what really happened in terms of the trading day today. Almost a day of 2 halves. I guess the first 5 hours and the last 1 hour. You could neatly separate those. Lata.
Well, that's very well put. The morning had several trepidations. The global indices themselves hadn't rendered a very good account of themselves. There were steep falls in Wall Street indices. There were growth scare, basically. Caterpillar numbers indicating that there is a global slowdown, a Chinese slowdown as well. Trade numbers from Asia were also indicating much the same. And then there was a fear that some scam might be unearthed by one of the websites which said that they would unearth a big financial scam at 3 p.m. But when it was unearthed, of course, it referred to a housing finance company. And we are still awaiting a reply from that company to the charges levelled by Cobra Post. But the point is, several other NBFC companies like Indiabulls, which had also fallen for fear of investors wondering who would be named in the scam. All of those saw a recovery. In fact, you must pull up Indiabulls chart. It's a recovery of about 6% in the last 1 hour or so. We did see a little bit of a recovery in DHFL as well. At one point in time, DHFL was down nearly 10%. But overall, there was a decent recovery in mid-cap stocks. But that should not hide the fact that several mid-caps have been hurting for some time now. You saw the escort stock hurt despite good numbers because the guidance was poor. And those chemical stocks, HEG, graphite stocks, are continuing to hurt. So there is a hurt, no taking away from that. The Nifty Bank is still down 1/3%, but markets are much better off than where they were in early trade. For more stock-specific action, and there was plenty, wasn't it?
Absolutely, Lata. And market breadth was much better. It was almost evenly matched, 50-50. The small cap index was up 1/3%. The mid cap index actually by close was up 0.6%. So, the broader markets did better than what the Nifty showed. The Nifty had about 18 points by close to show for it. Okay, let's dive straight into stocks. So, financials as a pack. These are private financials first. And all large names which did well. Bajaj Finance, Bajaj Finserv, Indiabulls Housing. Indiabulls Housing, the reversal, Axis Bank, ICICI Bank. Actually, these names also saw recoveries from the day's lows. PSU banks were the other pack which did very well. Bank of India, Bank of Baroda, Vijaya Bank, Indian Bank, OBC, Corporation Bank. Across the board, a fair bit of green is what we saw. Some related to numbers, Otherwise, I mean, there was sentiment which was not bad there. Big reversals in the Adani group of stocks. So ports, power, Adani gas, Adani green across the board. Not full recoveries. The falls were much steeper, but there was recovery nevertheless. I mean, something like a Z also continued its recovery by close. The large losers were Aisha. There was Gas Authority, and there was L&T, which was under pressure. We come to broader markets now. DHFL was down almost 11% at one point. By close, it was down 8.25%. It's at the center of some more controversy now. Dish TVs was down 9.5%. Z Media about 11.5%. So while Z Entertainment recovered, continued the recovery, these two have had no such luck. Escorts, Lata, you mentioned that. HEG Graphite, again, big cuts. Cadila, Manappuram and Crompton were some of the other big broader losers. The gains, and I'm only mentioning stuff with very large volumes. Praj was up some 15%, small name though. Mindtree, Emphasis on your screen. There was India Cements. There was a bit of green across the south-based cement companies. TVS Motors and Indiabulls Ventures, which was looking up as well on large volumes. Lata.
Okay, yeah, that's a bunch of stocks, but you must pull up the intraday of the Nifty itself. At one point in time, the Nifty touched a low of 10,580 or 583 thereabouts, and from there, look at the way it's ended. 70 points higher from the day's low. That last 1 hour jump after 3 o'clock is noteworthy. So where does this leave us in terms of the index's next move? Let's ask our guests. Mitesh Thakur is with us. Mitesh, what's the next trade?
Yeah, evening, Lata. So I think a couple of things. One, we had fallen from Friday's high to today's low at by about 350 points. So some short covering happened. Also is the fact that with this fall, I think the Bank Nifty was hitting the 200-day average at 26,470, 480 zone. So I think with that, we had recommended on CNBC also about covering short positions because that's a very important support area. After a long time, the Bank Nifty was at its 200-day average. I think the Bank Nifty bounced back very strongly after that, also propelling the Nifty along with it. And of course, some of the Nifty components also did well. So my sense is that maybe I think, we made a short-term low. Unless until the Bank Nifty now breaks 26,470, 450 zones, I think the idea should be to try and sell on rallies because the structure still is weak. But I think in the short term, a low has been made. So try to wait for the bounce back to play out. Try to sell on the Nifty close at about 10,730, 750 zones. On the Bank Nifty close at about 26,950 to about 27,000 zones. I think that's the area where I would explore shorting again. Otherwise, it will be a choppy market within this range of 500 points for the Bank Nifty and about 150 points for the Nifty for the next few days.
New range. It used to be 10,750, 10,980. What's the new range now? It becomes 10,600?
So I think my sense is that eventually we'll test 10,500. So the range should be 10,750 to about 10,500 on the downside.
Oh, okay.
Fair enough. And Mitesh, if the market opens flat tomorrow, you don't want to go long. I mean, you'd want for whatever bounce there is to play out before you sell. That's the only trade you want to take.
Yes, Prashant. In fact, today also, the idea was to cover short positions near support areas, which we did on the Bank Nifty and on the Nifty. But I didn't take a long trade, and I do regret it. But then, of course, you can't be very sure of how the bounce back will play out. Sure. Typically, bounce backs are very choppy and difficult to play. So the idea should be to trade more in the direction of the bigger trend, and therefore try to sell rallies.
Speaking of bounces, we will talk about Bank of India. We will talk about the Adani Group stocks. But our second headline is actually on the big earnings of the day. HDFC reported actually its lowest assets under management growth, AUM growth, in 5 quarters. Asset quality too deteriorated a tad on a quarterly basis. The stock ended over 1% in the red. The mighty Bajaj Finance too reported its numbers. The lender reported, again, highest ever loan growth in contrast to HDFC, and this was driven by strong growth in disbursements. Customer base expanded, but a minor hiccup in asset quality, oh so minor. Stock at 2% in the green. Abhishek is here to give us the details of both the numbers.
Well, Lata, AUM growth for SDFC Limited is one of the lowest seen, and for the first time, it has actually ended up below 15% at 14.8% YOY, clearly indicating the pressure seen on disbursement in terms of the liquidity crisis that we saw in Q3. So AUM was up about 14.8% YOY and about 2.7% quarter-quarter. There was hiccup in asset quality because the non-individual gross NPA or the corporate and other housing loans that they give out, was at 2.46%, which is the highest ever. Overall, the gross NPA in individual loan portfolio remains stable at 0.68 versus 0.66, and the entire book gross NPA rose to 1.22 versus 1.13. The NIM remained flat sequentially, and the spreads were also maintained at the same level, down only about 2 basis points to about 2.26% when compared to 2.28 in the previous quarter. Individual spreads were down 2 basis points and non-individual spreads down about 3 basis points sequentially. However, the net interest income and the net profit were slightly higher than our poll. Coming on to Bajaj Finance, it is one of the strongest loan growth seen in the NBFC. In terms of the AUM growth, for the first time, it has crossed the 40% level, being at 40.9% YOY and close to 10% sequentially. The AUM growth was largely driven by their consumer, mortgage, SME and rural portfolio. Rural portfolio is one of the high-yielding portfolio for Bajaj Finance. The customer base or the customer acquisition remains strong, up about 31% YOY and about 8.5% quarter-on-quarter. The new loans booked by them was at 68 lakh, up about 49% YOY and about 29% sequentially, which actually aided in their AUM growth. Slight negative from the result was the hiccup in the asset quality, as gross NPA increased to 1.55 versus 1.49% in the previous quarter, and the provision coverage ratio on the bad assets actually declined to 60% versus 65% quarter-on-quarter. However, the NII and the PAT was way higher than our estimates. Back to you.
Okay, thanks a lot for that, Abhishek. We have a question coming in from Srinivas from Andhra Pradesh. He's been holding HDFC shares, 15 shares of the company, purchased at 1930 rupees a share. Says he's a long-term investor, wants to know if he should hold or sell. Mayuresh, welcome, and that's the first question.
Evening, Lata. I think since he's a long-term investor, I think he should definitely hold on to the stock. As Abhishek was mentioning, I think the AUM growth was slower. But again, I think a large element in terms of how the macro conditions have panned out, I think it's still a reasonable amount of growth in my opinion. The other element in terms of the qualitative parameters that one probably looks at, there has been a slight increase in terms of asset quality with GNPS coming at 1.22. But again, I think that has to be taken in the stride of the book that it probably manages. And again, I think the NIMs and spreads more or less on lines that we expected. So again, I think the earnings growth should be reasonable for this behemoth going forward. So hold on to the stock. I think this is one stock that you can keep in your portfolio.
Okay. So he's just sitting at where he bought the stock. He bought it at 1930 and it's at 1922. But stay put is the advice. With that, let's get to the third headline. The Adani Group stocks recovered in trade today. Adani Enterprises, Ports, Power, all of them ended in the green after seeing severe cuts in trade yesterday. JP Morgan in its note bet big on the Adani Port stock. Although non-banking financials companies, several of them extended their losses. A notable exception is India Bulls, which pulled up a goodish bit, recovered practically all its losses by end of day today.
We've got a question coming in. Ankush Shetty from Bombay has written in with a query on Adani Ports. He's been holding 10 shares of Adani Ports. His cost is 390 rupees a share. Been holding them for the last 2 weeks. He wants to know whether he should keep holding or sell. Mayuresh, again, what would you do? Adani Ports?
So evening, Prashant. Again, I think the large element in terms of the business model is how the container volume growth will pan out, and the management seems very, very confident, not just for this quarter, but a better part of next year as well, in terms of upping up their container volume growth. In terms of their port performances, I think the acquired ports are expected to do well, and the key ports should continue their good performance on a consolidated basis. Coming on to the SEZ part of it, I think what probably happens in terms of monetization on that angle, obviously is going to be a kicker in terms of adding on incrementally to the earnings. So yes, his buying price is on the higher side, but if he keeps on his patience, he should hold on to the stock.
Okay, very quickly, Mitesh, which is the Adani stock that you would bet on? What a yo-yo movement over the last 48 hours.
Yeah, I think clearly, anticipation and news flow fears are worrying it. The best stock for the time being is Adani Transmission. I think it's doing a contracting pattern between 240 to roughly about 145, 150, and eventually could break on the upside. But Adani Port itself is not a bad stock to be in. So I would, if I was to bet on 2 Adani stocks, that will be Adani Transmission and Adani Ports in that order.
All right, thank you very much. Gentlemen, do stay on. We have to take a break. While we do that, we will also leave you with some very important opinion we got from Pictay's Venkatesh Sanjeevi. He's a big investor in the Indian markets, and here are his views on the markets and specific sectors. We're back.
I would rather think about FY20 as well right now, because today FY20 expectations are nearly a 25% growth in Nifty earnings. And out of this 25% growth, I think almost 40% of the incremental growth comes from 3 or 4 corporate banks like SBI, ICICI and Axis Bank. So if we exclude this, the street is building around 14% sort of a growth in earnings, which should be reasonable. But the dependence on 3 or 4 companies to deliver this 25% growth is also a cause of concern.
We are taking stock of what happened during the day, and a pretty dramatic day with lots of cuts and reversals all in one trading session. We got you 3 of the top stories, so let's move on to the 4th story today. Stocks that reacted to their earnings, more earnings. Escorts saw profit booking after posting an inline set of numbers for the 3rd quarter. There was positive commentary from management, which essentially said that they will outperform industry growth in the 4th quarter. Bank of India ended in the green despite worsening of slippages in the 3rd quarter. This is investors' hope the state-run lender will come out of the PCA framework pretty soon. I think we've got a question, Lata.
Yes, this is a viewer, Kanchan Devan. He has 300 Escorts shares purchased at 677 rupees a share. Says it's she, I'm sorry. Kanchan says she is a long-term investor. Should she hold or sell? Mayuresh, you first.
So Lata, obviously the disappointment came when the volume guidance was lowered, but again the management is reiterating the confidence that Q4 should be relatively better, both in terms of how volumes will pan out and how margins will pan out. The second element obviously is their distribution network, specifically in terms of North and West. And the third element obviously is the construction finance business and the railways execution, where they're sitting on an order book of 400 odd crores. So margins should probably see some amount of respite in the quarter to come. What probably comes out of the budget in terms of farmers' SOPs should be keenly awaited. So again, I think if she has a long-term view, she can very well hold on to the stock.
She's bought it at 677. She has not bought it at 1,000 rupees, which it touched sometime last year. So it's off highs and a good stock for sure. A quick chart check. She says she's long-term, but still, Mitesh, for as long as you can see the chart.
Well, in fact, I was just looking at it. The stock rallied from levels of around 120 in March 16 to about 1,000 rupees, and then has gone into what I will call as a medium-term corrective action. The recent lows, which was in October 18, was 540. So I think 540, 550 should be long-term support area. That's actually where some of the long-term supports are placed. And on the upside, 750 would be a resistance in the medium term. So I think next few months might be spent around these levels of 750 to about 550. Anything below 600 would be a good opportunity to add on to her stock holding if she can, and hold it on. I think after a few months of consolidation, I think the stock should start getting past 750 and then get into an uptrend again.
Okay, so that is Escorts for you. We move on to the last story of the day. Bank of Baroda perked up in trade, and the entire PSU bank pack was doing very well today. But BOB was up 4%. The market is still awaiting its 3rd quarter earnings. Axis Bank reported a robust 3rd quarter, but this was after markets closed. The asset quality improved marginally, and this is a big one that the market will react to when we come back tomorrow. Lata, your first reading.
Well, the profit has come in at 1680, and on the street the average was about 1200 to 1300 crores. So it's clearly a profit beat in the first place. But that's not the only thing you look at. You look at loan growth for a bank like this, and loan growth as a whole has perked up by about 8%, 7.9. But for the domestic business itself, it's grown by 18%, which is very good. And in spite of this loan growth, the total bad loans have actually remained static. At an aggregate level, it is about 30,000 odd crores. It remains at that level. Okay, that's the net interest income, which is also higher. But gross NPAs as a percentage have fallen because the aggregate has remained static even as the book has grown. As a percentage, it's a 20 basis point fall in gross NPAs and a 20 basis point fall in net NPAs as well. The amount of slippages would have been a worry. It's about 3,700 crores compared to 2,800 crores in the previous quarter. But no worries, because the entire 1,000 crore extra, or in fact the entire 3,700 crore, is from the book that was already declared watch list. And therefore the balance watch list, which is B minus rated companies, that amount has fallen to about 7,400 crore. So really no worries at all. It does look like the Axis Bank has gone on to a growth phase. It has passed its pain phase and is now building. The net interest margin is one big indication as well. So good growth, better growth than previous, and coming at a higher price at 3.47. Good numbers.
Okay, HCL Tech was the other one which came out with numbers. The numbers have beaten expectations for the third quarter. The stock also rallied 1% in trade. Rima is here with the big highlights. Rima.
The key highlight from HCL Technology has been the very strong top-line performance. Constant currency growth of 5.6% on a quarter-on-quarter basis. On a year-on-year basis, it's a growth of 13%, much higher than expectations, and also superior when you compare it to peers. Infy, for instance, had a 4.2% growth. TCS was at 1.8%, Wipro at 2.4%, and here we are with HCL Technology with a 5.6% growth. Some of the other internals include margins in line. Profits are higher on account of a lower tax. The company holds on to its FY19 guidance both on the revenue front as well as on the margin front. The other internal which is looking good is that the company tells us that they've seen the highest ever order bookings this quarter as well. So that is another positive. But the key highlight of the quarter has been the very strong revenue performance.
Thank you very much, Rima. That leaves us on a high. Good numbers from Axis, good numbers from HCL Tech. But the unfortunate news is that we don't have time to take more questions. Mitesh and Mayuresh, thank you very much for joining us.
And from all of us here, thank you very much for staying with us. More coming up on the other side.